Wagwan traders, welcome back to my channel.
As you can see by the thumbnail and the title, we will be decoding supply and demand, right? Because this is one of the most simplest strategies out there that you can use to trade when it comes down to trading. So as you can see right now, we're on the goal 1 hour time frame, and what I look for before I actually take a potential trade, whether it's a sell or a buy, is what trend is the market currently in. So right now, as you can see, we're on the 1 hour time frame, and we'll be using the 1 hour time frame for this example. Now if we look right here, coming down from right here, this right here is a downtrend. All of this right here is a downtrend, right? Now you want to look for the last lower high that it made before we had a shift to the upside, which is from downtrend to uptrend. Now if you look right here, this right here would be the last lower high in this downtrend, right? This right here. So what I'm gonna do after I figure out what's the last lower high, I'm gonna mark off that lower high. So I'm gonna mark off the high and I'm gonna drag it to the right. Right? So there we have it. So what happened right now, I want to see price break above this high and close above that high. And what happened, price did that, right? So this is now known as a market structure shift. So let's label that. So this is now known as a market structure shift. It's a market structure shift because the market was once trading downwards and then we had a shift to the upside. Some people would mark out this high right here, this small high right here, or even this, right? But I like this lower high because it's a major push, right? After we get this push from right here to this lower low, and then price came back right here, we have a major push after it made that high. Hence why I marked out this high instead. So let's clean up the chart real quick. Let's clean that up real quick. Alright, these highs are just internal highs coming from this major lower high, right? So let's get into the example. So once I see that price broke and closed above this high, right, we know of a market structure shift. Now what you want to also pay attention to is where the major displacement happened, right? So this is how you mark out a valid demand, right? I'm going to show y'all also a supply example, but right now we are focusing on a demand example, right? They are no different, it's just vice versa, right? So I'm going to show y'all how you mark out a demand. Let's zoom in to the chart. All right, how do you know that this is a valid demand? I'm going to show y'all. This candle right here is an indecision candle. The reason why I would have this candle as a valid demand is simply because price displaced aggressively from that candle. So as you can see right here, we had some consolidation happening right here, right? And then the last candle before the major displacement was this indecision candle. Now some persons would be like, all right, cool, the last candle, the candle that you should mark out for demand is the last down candle. But guys, this is not how I mark out my supply and demand candle. Now the candle that some people would mark out is literally that candle right here. Sorry about the noise in the background. It's that candle right there, right? But I love to be precise when it comes on to my zones. So I would not mark out that candle, guys. What I would have marked out is literally this candle right here. And the reason why I would mark out that indecision candle is simply because it is the last candle before the aggressive displacement to the upside. So you see that displacement that literally gave us the market structure shift, right? That's what we want to mark out. And not just that, another thing that I must add, we had a fair value gap right here. So let me show you all that as well. We had a fair value gap right here, guys. So you see that right there? We had a fair value gap right there. So that we can also mark that out. But usually I do not mark out the fair value gap. And if we look below right here, we do not have any more fair value gap. So what is that telling us? Right? What is that telling us? That is simply telling us that price is not going to come any lower than this. Now, I'm not telling you that this is a guarantee. Price can definitely come lower than this zone, right? Because nothing in trading is 100%. But, you know, we're not predicting the market. We're only reacting to it. So we're trading what we see. We're not trading what we think is going to happen. We're literally using things that leaves behind clues. As you can see, it is marked out completely, right? Now, I am not going to take this trade when price returns to this zone. What you want to do is literally refine your entry. So if I'm on the 1 hour time frame, I want to go to the 5 minute time frame, right? Because the 5 minute and the 1 hour, they align very well. So I'm going to show you all right now what I am going to do, right? So remember, this is on the 1 hour time frame. This zone is on the 1 hour time frame. So as you can see, this is the 1 hour time frame. So a lot of candles we're seeing in the 1 hour time frame. But what do you realize? This candle right here, this bearish candle right here, is the last candle after we had the aggressive displacement upwards. So this gap is a displacement. You know, we don't have an actual candle there, but it's a displacement. So what you want to do is put the zone at the high of that candle. Do not interfere with the low of the 1 hour zone, because that's where we want to put our stop loss, right? Now let's go back to the 1 hour time frame, guys. Let's go back to the 1 hour time frame. Look how simple, look how clean this is, right? Now as you can see, after price did this rally, right, a lot of persons would be chasing this run. But the truth is, this is not the real run, right? This is not the real run that you want to be a part of. Because as a trader that trades supply and demand, and know that if we have an aggressive displacement like this, it's a must that price is going to return to the demand and give us that entry that we really want. Now, what you would do is just set a limit literally right here, right? And when you set that limit right there in the zone, price would then come back after 1 day and 16 hours. That's why you need to be patient when it comes down to supply and demand. And you're gonna just put your stop loss right below the low, and you're gonna aim for the high. Now as you can see, price is not there as yet, but price is eventually trading towards that high. And for this trade, that's a 1 to 11.8 risk to reward. If you were risking $1,000 on this trade, right, your reward would have been $11,880. So that's a 1 to 11.8 risk to reward. Literally just like that. Simple setup, nothing too crazy. You just need to understand what trend the market is currently in. So first we had a downtrend. Let's run over it real quick. All right, first we have a downtrend, and then after the downtrend, the market came and it did a market structure shift. So we want to mark out the last lower high if we're in a downtrend, and after we get a break above that lower high and are closed, right? So we cannot get a wick. We need the body of the candle to close above the lower high, the previous lower high, right? That is now known as a market structure shift, and we want to mark out the last candle after a strong aggressive displacement. And as you can see, we got that strong aggressive displacement to the upright, market structure shift, and then we just want to go down to the 5 minute time frame to refine our entry. Now as you can see, that's what I did. That's why the entry was so precise. You only want to refine your entry one step down. You don't want to go all the way to the 1 minute time frame, because if you do so, you can end up missing out on that entry. So guys, it is that simple, and I'm going to give you all an example on supply in another video. Actually, I'm going to make that video right after this video. So this is a demand example. So supply and demand decoded demand example. But yeah guys, simple as that. You want to set a limit leave the charts and just wait for it to come and execute your limit. Just put your stop loss down below the zone, take profit at the previous high. And as you can see, this is actually a 1 to 14 because you want to put your stop loss exactly below the low. And there you go. Even better, a 1 to 16.44. So if you was risking $1,000 on this trade, let's say you have a 10K account and you're risking 10%, and you risk $1,000. Sorry about that, guys. And you risk $1,000 on this trade, you would have on your way right now to make $16,440, guys. And this works. I'm not gonna say 100%, but it works at least 80% of the time if you do it right. So yeah, guys, with that being said, see y'all in the next video. I'm gonna be breaking down a supply example. This was a demand example. Simple and clean. No need for your charts to look cluttered. See y'all in the next video.